Now we look into a smart trade from the community at gt247.com. And Mark, what will it be this week, considering the world looks as though it's changed again?
Well, this is the thing which is, coming up with. We've got loads of ideas and things that kind of move through, but the so-called taper trade and the way the whole market is changing at the moment, we think is probably a lot more topical to discuss than any specific trade, because we're seeing strong correlations across assets and things are really moving around. And I think it's a time to start doing a bit of very strong gardening in portfolios.
How do you react to that?
Well,
and how are your gardening skills?
Let's just go through what the supposed new kind of situation is. We've got emerging markets out of favor, meaning emerging market stocks, emerging market bonds, and emerging market currencies, all gone, kaput. You've got a big flow back into US assets because the big hot money kind of returns are to be had apparently now in America. Japan has got people worried. So now that's supposedly the brave new world in which we live. But I don't know. I mean, if I had 15 cents for every time I'd heard that the supposed trade was changed and the world was going to be different, then I would have had a big cash bank balance by now. So I'm disinclined really to be too enthusiastic about this. Secondly, I think if people are selling stocks today because they're disappointed in what Ben Bernanke said 2 days ago, then they must recognize they don't really know what they're doing, or they've got rocks in their heads or something, because what did they think, that there was going to be QE forever?
Some people did think there was going to be QE forever. Mark?
Well, maybe there will still be QE forever, we don't know yet. No, the key thing is, as far as this equity portfolio that we have here is concerned, this is mostly a bond story. I mean, obviously, we're seeing what's happening in terms of the ramifications on the equities. It's a big, huge story on the bond side. And there are some very, very big issues and some there's a big inflection point at the moment on that side, undoubtedly. We've seen US bond rates bottom out. We've seen yields go up substantially right across the board. And there is a carry trade complication issue taking place now in the bond markets, whether we like it or not. As far as this equity portfolio is concerned, we've got a lot of earnings coming through from our companies offshore. So there is that very, very strong components and a buffer, if you wish, that can protect to a certain degree the market. Now, the movements that we've had on our markets seem to be a little bit excessive at the moment over the last couple of days. If we're down for more than 2 or 3 days, it starts to look like we're entering another kind of phase potentially in where the market is going. So my real advice is, I think we've got to be very, very careful now. We've seen this kind of thing was going to happen for probably a good 5 or 6 weeks now in terms of being able to anticipate where we are now. What we can't truly anticipate is what will happen in the next 4 or 5 weeks. So
well, that's the fun and games of markets. You can't anticipate what's going to happen for the next 4 weeks. In fact, you're a little nervous to be off the markets right now. We better get this show on the roll so we can get you back to your desk. You don't know what's unfolded in the last 15 minutes or so.
I mean, like today, we had markets very weak in New York, the close on Thursday night, and then the Nikkei strangely kind of ends up on the day. So this morning we come into the office expecting carnage, and in fact we're in the green. We've had a couple of key breakout stories with companies like Aspen, for example, doing a very good deal, and suddenly, boom, it goes up by 10% over a couple of days amidst all of that carnage. So one does really have to be reminded that things are never certain in this game, and that share prices are really just at the midpoint between the buyers and the sellers. It's all nonsense.
Are you setting the context for how the hot stocks portfolio has fared this week before we go to that segment of the show? I see this is this uncertainty, we don't know where things are going, carnage on the markets.
But look, you can always depend on me for a sunny disposition at all times. I don't lose any sleep whatsoever. Share prices, you're in the market, you get the gains. Nobody ever complains when the market goes up. When it goes down, it's in the natural order of things.
Mark, you wanted to add?
Look, the thing is, you've got to, I still believe there is a secular bull market, and I still believe the equity market has got a long, long way to run over the next couple of years. Bear markets, people, traders, longer term traders and position takers should view as a kind of almost like a supermarket where you start to get a markdown. And the thing is, you want to get a good deal. You want to get that share, that quality share that's been marked down at a very good deal. And bear markets afford you that opportunity. So I always find little bear trends, little bear pockets very, very, make me very, very happy. You can get some good deals, but you've got to have a good nerve.